Hi everyone and welcome to Finladder. My name is Ishan and in this video we are going to talk about the future of Bajaj Finance share. So on 24th April Friday, Bajaj Finance made a new 52-week low of 1970 rupees. The same stock was rated at 4923 rupees on 20th February 2020. So in around 2.5 months, the stock has fallen from 4923 to 1970 and it is currently trading around 1976 rupees. So what made such a huge fall for the company and what is the future perspective of this company? Should you buy this share or should you sell this share in case you are holding it? So we are going to talk about everything in this video. We are going to talk about the charts as well later in the video. But right now, just before beginning with the whole analysis, let's just see what exactly Bajaj Finance is into. Bajaj Finance is an NBFC, and NBFC is a non-banking financial company which is pretty much the same as a bank except they do not accept the demand deposits from the general public. So it is more or less just like a bank, but it doesn't accept the demand deposits. So Bajaj Finance being an NBSE, it offers majorly consumer finance. So what it does is it offers the loan to consumers. Now due to the COVID-19 situation, due to the lockdown, the consumption in the economy has gone down severely. It has gone down a lot. So just think for a moment. If the income has fallen down, the consumption has fallen down, and Bajaj Finance has already lended to a lot of people. So there is a very high chance of defaults. And at the same time, the non-performing assets are also going to increase. So it is going to be a very hard time for Bajaj Finance. So if you are holding this stock or if you are planning to buy this stock because the stock has fallen heavily, that is without a certain doubt. But should you buy it or not, that is the cause of concern. Because if you have to buy it, then at what level, that is also a main point that we are going to discuss in this video. So since already mentioned that consumers could make a lot of defaults, so the company is going to take a big hit. At the same time, they have also entered into certain amount of certain degree of finance in which you wouldn't like to enter. For example, now what they are doing was they were offering finance for people to go abroad, travel and pay later. Now just imagine somebody who had taken a loan in November 2019. That person went with his family to, let's say that person went to US. Now that person took a loan from Bajaj Finance and now he has returned. He has come back to India and he has to repay the loan. After the lockdown, do you think that the chances of that particular person defaulting will increase or decrease? Because the income has gone down, the consumption has gone down, there is a very high risk of people defaulting, especially on luxuries. You won't see a lot of people spending on luxuries, and generally there is a statement in economics that people default or more people default who are buying luxuries rather than those who are buying or rather taking loan for building up houses or like family income or education loan and all these things. So that is a very major concern for Bajaj Finance as well. Now let's just move to the technical analysis part, and once we are done with this, I'll give you the final conclusion regarding what you should do, whether you should buy the stock, if you have to buy the stock, then at what levels and around what time. If you are holding the stock, then should you sell it or not. We are going to discuss everything about it once we are done with the technical analysis part. So now let's just quickly go through the chart of Bajaj Finance. So as said in the video already, it made a high around 20th February of 49.73 or somewhat. You could see the price on the top left hand side. 49.23 was the high that Bajaj Finance made on 20th Feb. So after that, you could see that there has been a free fall in the stock and now it is trading at 1980 or somewhat around that, 1976. So this free fall has caused a major hit to the investors of Bajaj Finance. Now let's just quickly compare it with Nifty. So this blue chart, this blue line is of Bajaj Finance and the red one is of Nifty. So around mid-Feb, Bajaj Finance had outperformed Nifty by a very, very huge margin. You could see the gap, you could see the difference here. But since the beginning of March, there has been a free fall in the stock. Or you could say from the last days of February, we could see a very, very deep fall in the stock. And now, when we are talking about somewhere around 20th March, the stock had underperformed Nifty by a huge margin. Now, you could see it was just moving around with Nifty, but now the difference is so high that it is continuously underperforming Nifty. Even though the Nifty rose a bit, Bajaj Finance stock has gone completely in the opposite direction. So this was the comparison between Nifty and Bajaj Finance in the past 2.5 months. And now let's just come to the final conclusion of this video. So now we are done with everything and coming to the most important part of this video. So should you buy the share or not? According to me, in the near term, you should not at all buy the share. The stock had recently fallen a lot and you might see a relief rally coming up, but still, in the near term, if you are an investor, then you should probably stay away for maybe a couple of more months. The stock currently trading at 1976 might even go down to the target given by Bernstein of 1740 rupees. So they have downgraded the stock heavily. So personally, as I said, in the near term, you should definitely avoid the stock. Do not buy it. If you are holding it, then keep a strict stop loss at 1600 rupees and exit if it falls below that. At the same time, if you are a long-term investor, trust me, Bajaj Finance is a wonderful company and it will definitely come out of this lockdown situation. But in the near term, the stock might fall even more. We could see even 10% fall. And after that, in the year 2021 of financial year 2021, we might see a little bit of consolidation and we might see the stock improve. But currently, as I said, in the near term, you should definitely avoid the stock. If it hits a level of 1600 or below, let it fall further because there is a very, very strict stop loss at 1600, and if it falls below that, then there could be serious repercussions for the stock. So buy it on dips if you are a very, very long term investor, but currently in the near term, avoid it. And after 2 to 3 months, when the things settle down a little, the lockdown is over, people are back to spending more, then definitely go for this stock because it is going to shoot back really well in the upcoming months. Not in the near term, but after that, we will definitely see the stock outperform the market really well. So considering if you're a long-term investor, do buy the stock after a couple of months. Just wait for the right time. Let it fall a little more. And it is on the cards, to be honest, for the NBFCs and for the banks to have a little difficult and a stressful time during this time. But after, as I said, a few months, this stock will be wonderful to buy. So this was my recommendation on this stock. If you have any queries, anything, you can put that in the comment section, and would also love to have your reviews on this. Thank you so much for watching this video.